White House making the case that the latest jobs report shows that Bidenomics is in action. Non-farm payrolls increased by 209,000 jobs last month. It was the slowest month for job creation since payrolls fell by 268,000 in December of 2020. But wages last month were a bit stronger than expected. Joining us now is Jared Bernstein, chairman of the President's Council of Economic Advisors. And you are, Jared, a good soldier. You're fearless. You come on no matter what, and you are there. You're here to do a job, and that is to make the case for the Biden administration about the economy, and we appreciate it. And I will tell you that if we get we've heard that we're going to have a soft or a cooler CPI number. We just had a prediction for that on Wednesday. And if you did combine that with the last couple of months of job growth, things are, I don't know whether it's because of any of the recent legislation, but you would have some things that you could definitely say are very positive in the economy right now.
Yeah, I think the numbers make the case for Bidenomics. I'm happy to come out here and talk about them, but these are facts. So, you know, of course, we've had 13.2 million jobs since this president got here. And yes, we've seen some cooling in the job market, and that's necessary and important if we're going to appropriately align labor supply and demand. And by the way, when you just tick through the jobs numbers, you hit the highlights as you well should. But I actually think one of the biggest highlights in there is the improvement in labor market participation. This is so important on so many levels. We now have a working age LFPR, labor force participation rate, that it is a 20-year high. And for women, it's the highest on record going back to 1948 when those numbers start. That means that a strong labor market is pulling people in, giving them a chance to reap some of the opportunities that Bidenomics offers. You know, Pillar 2 in Bidenomics, empower and educate the workforce, and a low unemployment rate below 4% for 17 months. That's empowering for workers.
Now, okay, so I thought that was really nice, my question, because it gave you a great opportunity to talk about all that. But just philosophically, and I want to hear your answer to this, Jared. And it's in the Wall Street Journal opinion page, Andy Kessler. I mean, the name of it's not very nice, the Bidenomics blather. But I think there's something to this, that Bidenomics, you're hailing it as, as responsible for that, but it throws free trade and free market capitalism under the bus in favor of centralized government controls. And that there is a perception among certain circles, whether it's whether it's libertarian or conservative circles, that the government is picking and choosing winners and losers and over-regulating, and that's going to be a problem down the road, because the government, remember Solinda, the government is not the most effective way to choose which path we take in a lot of arenas, and yet the Biden administration is doing that.
So there's a couple of really important and I think foundational pushbacks to that argument. Okay. The first is one that's really very underappreciated, which is that we didn't get here and start doing industrial strategy. If you look at our tax code, it's been embedded with industrial strategy almost ever since we've been a country. In fact, you can go back to Hamilton and see manufacturers in that regard. But really, I'm talking about the modern era, where industrial strategy was a function of who had the best, most connected lobbyist who could get you the best tax breaks. And that led to a disproportionate set of policies favoring the financial sector. What we're trying to do, and this is the second point. So the first point is that this is not that new. We just think we're doing it more smartly. And the second point is that one of the key underpinning factors of Bidenomics, and Pillar 1 is smart public investment, pulling in private investment, is that latter part. This is not public investment. This is a full stop. This is public investment incentivizing private investment to come into the market, to stand up a domestic semiconductor industry, which I believe maybe outside of the Wall Street Journal op-ed page, most economists would recognize as an important thing. To stand up a domestic electric vehicle sector, clean energy, a battery sector. All of those have brought in something close to $500 billion of private capital following in the wake of policies from the Inflation Reduction Act and the CHIPS Act. And if you look at that in terms of manufacturing facilities built in this country, you'll see about 100% increase in those facilities, private capital at work, which is a stark contrast to what was going on before we got here.
There's some, I mean, it is an interesting piece. I don't know if you got to see it today. And Andy Kessler's not really much of an ideologue, I don't think. But combined with a lot of the industrial strategy, there's layers of regulation. And, to get some of the, the largesse from the government, you got to have, the government wants child care, wants this. You have to cooperate with us doing that, this other. There's a lot of what at least some people would call over-regulation in all of this stuff, which seems to gum up the works. Jared, do you acknowledge that?
Well, let me point out that we have had extremely strong demand for the tax credits in the IRA to support, as I've mentioned, domestic chip production and clean energy production, setting up EV battery stations across the recharging stations across the country. And so I'd say private entrepreneurs are voting with their feet. And yes, we've got to be great stewards of taxpayer dollars. So we're going to be pretty careful as to how we provide these subsidies. But I think the key point, again, and this speaks obviously is directly opposed to some of the ideas you're telling me about, is that this is not just private capital. It's not just public capital. It's public working together, pulling in private. I think one of the very mistaken ideas about trickle-down or top-down economics was that public investment would be backfilled by private. That turned out to have it pretty much backwards. Public investment in key areas where we need, both for our global competitiveness, but also for our national security, that is showing its strength in pulling in private capital. And it's that public-private synergy that I think is at the core of this pillar one of Bidenomics, which is turning around decades of disinvestment in the U.S. economy.